Jim and I were sitting here doing a little trading, and boy, he almost got perfect pivot point entry. In fact, he hit the low on the entry, but he didn't get filled on it. But he's on a paper trading account, so on the real account, he probably would have gotten hit. But,
perfect.
Yeah. So yeah, if you take a look at the MES this morning on the pivot, we got a perfect entry point. It was absolutely wonderful. Right after the 5-minute bar, and boy, he would have nailed it. That's for sure. And
Nice.
We're talking about the free contract, so we could have had a free contract on that one too. Would have worked out really well. So for you guys who don't know what the free contract is, wait till the next HLM live 20. What is it going to be? 2021 another one, or 2022?
We're going to find out. We haven't exactly announced the dates yet. There could be one more in 21, or it might be the first class of 2022. We'll see. We are so if anybody noticed, we've been a little bit quieter because there's a lot of work going on in the background right now with new stuff coming, and we've had such a good time with that HLM class. We had such good responses that I'd say we're 98% of the way of announcing that there will be more classes coming. So when exactly that will be, we'll let you know. All right. Good morning, everyone. This is Dan from tradingology.com and the Traded Room for October 14th, 2021, coming to you on a Thursday. Good to see you guys. Getting the doors open up here. We have some interesting market action happening. Good morning, Tom. Good to see you. And good morning, Dave, as always, joining us from our Strong Market business partners. Good to see you, Dave.
Good morning, everybody.
Where's Dave? Oh, he's got a sneaky man in the background there.
We have a guest today.
How's it going?
Doing good. How you doing there, Jay?
I'm doing pretty good, man. How are you?
Never a dull moment.
And I'm just very, very envious of the skydiving. I always wanted to do it. Now I watched your analysis of it. I'm like, man, that looks like something I need to do. It's incredible.
Oh, you're gonna go make me watch the video again. Every time I think about it, it's all I can do. Hence it's now I'll move this out of the way. My wallpaper. I can't get away from it.
Yeah. That's a reminder.
Yeah, you got to do that. I mean, it's just it's got to be a thrill. That's for sure.
Again, for anyone that's ever even considered it, highly recommended. It will change your life for the better.
I probably feel better if I had the two guys hold on to me.
In case you didn't catch it the first time, if you're a first timer, after going through the accelerated free fall, I would recommend doing a tandem jump once and then do this if you want to do solo.
Yeah.
Because you'll kind of understand what's coming before you have to do everything yourself, because it is a lot of stuff to remember. 100%.
Yeah.
But it's a good time.
Yeah.
Tom says I skydive and he vacuums in the office. Yeah, he's got his quick update on weather. And if anybody didn't see it, South Dakota got nailed, Wyoming got nailed.
Oh.
Denver had a little bit of chance, but they might get some more coming now, Tom says. So prepare yourself there, New Yorkers. It's coming.
No, I don't want to see that.
Although the storm that hit them was going straight north, so you're safe right now.
All right, that's good. Yeah, Tom, direct that north.
It's up in Canada now, to our friends up there that just had Thanksgiving.
Good.
It was their Thanksgiving storm, basically.
Yeah, Jay. I'm still gonna call him Jay Hyatt. Jim and I were sitting here doing a little trading, and boy, he almost got perfect pivot point entry. In fact, he hit the low on the entry, but he didn't get filled on it. But he's on a paper trading account, so on the real account, he probably would have gotten hit. But.
Perfect.
Yeah. So yeah, if you take a look at the MES this morning on the pivot, we got a perfect entry point. It was absolutely wonderful. Right after the 5-minute bar, and boy, he would have nailed it. That's for sure. And
nice.
We're talking about the free contract, so we could have had a free contract on that one too. Would have worked out really well. So for you guys who don't know what the free contract is, wait till the next HLM live 20. Was it gonna be 2021, another one, or 2022?
We're gonna find out. We haven't exactly announced the dates yet. There could be one more in 21, or it might be the first class of 2022. We'll see. We are so if anybody noticed, we've been a little bit quieter because there's a lot of work going on in the background right now with new stuff coming, and we've had such a good time with that HLM class. We had such good responses that I'd say we're 98% of the way of announcing that there will be more classes coming. So when exactly that will be, we'll let you know. But yeah, there's a lot of stuff going.
That's right. And remember, they're only live. We do not sell the recordings. But if you do take the live class, you get the recordings.
Exactly. You get access to those once you are a live member.
Yeah.
Tom can contest. And we do not pay Tom. He just says he's a graduate. He went through the first class, the most recent one. He highly recommends it. So we appreciate that, Tom. And again, Tom is not a paid spokesman. He's not an actor. He is a real person.
Yes, he is real.
Interesting levels we're at here because he says, "Can you tell my wife that?" Tom, you're awesome.
That you're a real person, or you're not a paid spokesperson?
Not an actor. She thinks he's an actor. So Thursday, of course, we have to quickly touch on our calendar events. We have unemployment claims. Guess what they're using to go through the roof? They had a forecast of 315. We came in at a big old green 293. So it looks what's across all the headlines. The Dow's jumping, better than expected reports. We even got Bloomberg. Oh, lowest since March of 2020. Everything's great. Here's the fun one I like here. High class problems. I usually don't look at Fox News just because they're so out there, but whatever. I don't keep politics out of it, but I look at all sides. Biden's chief of staff stuns critics as he dismisses the supply chain crisis and surging inflation. That's a good one. I like that one.
Wow.
And then who's our last friends over here at CNN? My Zoom window's getting in my way. Move that over. There we go. No real talk of it there. I didn't see anything. They got Joe Rogan's on the headlines. Rising prices will blunt Social Security woes. Oh yeah, that's the other thing. In case you guys didn't see it, anybody that's on Social Security is getting a big raise next year. 5.9% increase. That's the biggest in 40 years.
Yeah, we were just talking about that.
That was one of the headlines yesterday. It's probably down the line here if it's even on CNN or CNBC anymore.
Yeah, it's still there. I found it this morning. Biggest boost in 40 years. And I mean, look, if it has anything to do with inflation, which obviously it is, because the average increase in Social Security is like 1.5%. So this is a big deal. This is 3 years of increase in just 1 year.
And that's all they're always protecting, right? Because that's the majority of the voters out there over time has been that the baby boomer generation. So they're always there to protect them. You know, if it's coming, they're going to try and protect them too. So they're giving them this raise ahead of whether they can control inflation or not. We will see. They're definitely still trying to keep a cap on it, but they have also, with the FOMC minutes coming out yesterday, that was another thing that was released, was the meeting minutes. And the market shot up right after that. Then it kind of went back down. But they were talking about tapering maybe again this year. So it's definitely more in their things, but they don't know exactly. They haven't said exactly when. But you combine that with out of control supply chains, even though some people claim it doesn't exist, they can't lie. I know people in logistics, there's problems all over this globe.
Well, there was a statement in that article saying that they were going to probably start to taper sometime in mid 2022. But actually tapering could start as early as November. So as the market is a forward-looking instrument, typically 6 months out, I mean, you're looking at maybe November, December before it starts to hit the market again.
Let's take a look at here's the statement from yesterday. Still, this line just doesn't change. The full range and the tools and its support. Maximum inflation rate at 2%. Well, I think we're already over 2% for the long run. Didn't they already? That's already.
Oh yeah, Social Security is going up 5.9%. That means it's closer to 6.
Yeah.
Already. Yeah.
Committee will continue. Here's their. Here they went from 80 right now. It's at 120 of month currently. Isn't that correct? If I remember right?
I think it's either 120 or
Or
150.
160? Didn't they double the 81? It might be 160.
Yeah, I think it is. And so even if they reduce it down to 100, it's still more than they were running before.
Yeah, so that's definitely over the tracks.
Remember when it used to be like 4 or 5 billion a month?
Yeah, they just keep making up new numbers. So,
Yeah. And who keeps track of all that stuff? Nobody.
and so with that, what do we have today? We got a big old gap up in the indexes. I shouldn't say a gap up in all of them, but they're all between 1% and 2% higher right now. And if we look at some of the longer term trending here, we'll see if these act as resistance one more time than it has 3 times previously on the Dow. 34, call it 880, 870 is going to be an interesting spot to watch.
Yep, that's the 50-day, right?
Yep, that's the 50-day simple moving average right there. Same thing with the NDX is a little bit farther away. The NDX has a big gap in it though. So we'll see. We've always talked about the market doesn't like gaps. Now it's got one below. So how long will that one stay there? We'll track that one as well as the SPY here, the SPX. Big gap up in that. So we'll watch for resistance. 2 days ago, we had bullish hurting like this, where right now we have 5 columns filled in on the intraday indicator. It's going to be interesting to see where this day finishes because we had 4 on Tuesday and it finished with none. So is this just an early morning? Hey, we're happy and it's going to sell off in the afternoon. We will see. One thing that is slightly different, I'll pull over the internals here. We did open up in this true trend day area, but we are dipping below 2000 right now, actually, just for the first time. So if those internals don't hold, look for that hurting to go away if that comes drawn closer to the 0 line. If it stays across, yeah, it's going to be happy times all day. So that's going to be the telling factor there. The NASDAQ we see is already dropping down. It didn't open quite as strong, but definitely strong openings on the internals.
Yeah, we don't have any separation on the volume and advanced decline issues either. So we're pretty close together there. The chances that, I mean, it's extremely rare for the market to open up plus 2000 issues on a day and then kind of reverse. It just doesn't happen very often, but we'll see. I mean, we've had some weak closes over the last week or so. But
yeah, it's kind of what yesterday was a mixed bag where it was up and it's down, which those again are typically more rare, but we're seeing more rare things happen more often in this market landscape. That's for sure.
Yep.
That's why you hear us, obviously use the word typically. Nothing is 100%, whatever happened in the past doesn't always happen, but as the saying goes, it doesn't always repeat, but it often rhymes. But we get things that are more unique than usual. So that's an interesting fact there to watch. So keep an eye on that. Keep an eye on those internals. 1987, yeah, we're the lowest of the morning so far. So we'll keep track of that.
If you got the spreadsheet handy, we could go over that real quick because we do have an interesting phenomena going on right now.
Does it have to do with the last 4 days?
Yeah, very unusual on the spreadsheet not to have any bullish hurting. I mean, you can go all the way back. That spreadsheet goes all the way back to 2016, I believe. And I mean, it's extremely rare not to have any hurting at all for 4 days in a row. We've had a day here, a day there, a couple of days, but not 4 days in a row. So today is kind of like a tipping point. If we get a lot of bullish hurting today, it looks like we're probably going to do that. We may end up trying to, go back up to the old highs again. We'll see. But
and not only the last 4, but if you take out this 1 day, so you figure the 4, 6 out of the last 7, there's been none, and 8 and 9, there's only been 1 column filled in.
Yeah, it's really been a battle between the bulls and the bears.
And we see that right there. We're sort of getting back close to the 0 on the 21 and 27 day sum. So it's pretty much kind of flat over the last 2 weeks. If you were in and you just held it, you'd be about level because we've had down days and up days and it's kind of leveled out. That's what this 21 and 27 day does also show, is watching those ebbs and flows. Did we look like we might have plateaued? It's because it's been lower peaks and valleys I've seen too, watching the buy sell, where we haven't gone to a double digit for back since 823 here was the last time it hit a -12.
Yeah.
We didn't get up to a 10. It came back down. Then we only went to a -6. and it returned. Now we went to a 4 or 5, came back. Now it's only a -2. So their lower waves is that going to continue? We're going to watch, because we stopped at a 4, then we went to a 5 yesterday. If
Yeah.
today continues, we'll probably go higher on the buy sell signal.
Yeah, that's interesting. So, I mean, it's, using the tabs down below, you can kind of track that on a chart basis. See exactly where we are on those. I don't know.
Yeah, see, here's where that's shown exactly. So there's the -10, didn't quite make it. They're getting smaller waves. So that spring's condensing, if you look at it that way.
Mhm.
The 27, we're just about past the time to see those major sum moves. So this is on a rolling 1 year scale. Then the LT signal, there's an interesting one I should pull up. I'll bring over the NASDAQ one too. So that long-term signal
Keeps trending lower.
Yeah, it's still pointing down. Is it going to hit the 0 line? We were below it a year ago. So will we go negative again? And a similar outlook on the NASDAQ. I'll pull over that one quickly, go to the LT. That one did get to its low and it's starting to trend up. So we'll see. Is the Dow heading down and the NASDAQ going back up? Same thing kind of plays out there with the buy sell. It's doing compressing as well from a spring perspective. But it's down here at the negative side. So is that going to bounce back up? So same numbers, just looked at it from a visual standpoint. So it's interesting to watch these. And the NASDAQ is the same, not as much, but still 3 days in a row of no hurting on the NASDAQ exchange as well.
Yeah.
A little bit higher numbers, a little bit higher volatility. That's why I'm kind of
Yeah.
surprised.
Yeah, that is kind of surprising. Yeah.
And the swing just recently turned down. So this may be a fake out on the NASDAQ. We'll see. Because if rates do go up, that's the first thing to get hit again. We've seen that recently.
That's right. Yeah, that's an important relationship to keep an eye on.
So,
and interest rates today are down, I believe. You've got the 30-year. Oh, you've got the 30-year up just a little bit, still hovering above 2%. The 10-year is down a little bit at 1.52. So it hit 1.6.
let me grab over the yield chart here.
And cotton hit a 10-year high.
Really?
Yeah, cotton futures hit a 10-year high, which is kind of interesting. Haven't really looked very much at lumber lately, but I think lumber's been going up a little bit more too, but not to the levels that it was.
Interesting hit on the 10-year where it's we were talking about this a few days ago. I don't know if it was Tuesday or last Thursday, but
yep,
it just barely peaked above that long trend line. Now it's back below it. But let's see. 1 year, 3 year, 30-year. So there's our yields across the board.
That 3-year looks like it's ticking up, doesn't it?
Yeah, that is the one that is up. So that's interesting. Usually the 1 and the 3 kind of go together. The 1's down and the 3's up.
Yeah, that's interesting.
Yeah, what do we got for percentages there? 5% down and 24% up. Although when you're close to 0, a 0.125 move is 24%.
Right.
That's an interesting viewpoint too. I almost couldn't believe that when I said that 24%. Because yesterday was a 25% move. The day before was an 18% move. And it looks like not much, but if you're near 0, you have to kind of look at it like this.
Oh, you're on a monthly chart there too.
Oh, that's true. I had a couple of these on dailies, didn't I? There you go. That explains it.
Yeah.
Good eye, good eye. There we go. That's better.
Yeah.
Now they're both down on the day. That was too rare. Good eye. Is everybody on dailies here? Everybody's on dailies now. Okay.
Yeah. So a little bit of a pullback from kind of a rush higher. We'll see. There's still a lot of people in the deflationary camp. I know that Stephen Van Meter is, Lacey Hunt, Dr. Hunt is still in the deflationary camp. But then there's others who are just like saying, hey, this inflation thing is not going to go away. It's just going to keep going higher. higher and higher. If inflation does continue to go higher, though, the Fed really doesn't have any choice but except to raise interest rates. What's that going to do? Oh my gosh.
Remember you were talking about that W pattern
Yep.
on the Dixie? I think I might have shown you this. I'll show everybody else here now. Tom, you might like this one. Jim, let me know what you think about this. I did some big boy chart extraction and maybe just playing with lines. So here's our most recent W. I took into point, well, before that, we had this price action that happened. And prior to that, it came from way up here. I drew some additional lines. And this was when the pandemic started back in March, where we had the major bounce.
Right.
But taking that out of the picture, I started from here. I started from 100, where I saw this big move down, little bounce, big move down. And, we've been trailing down ever since then. Whoops, I moved that line by accident. So I drew the other half of this. Check this out. Let's see if this plays out. Not saying it's going to, just saying it might be interesting to watch. So I took this into account. If we repeat, or if this mirrors on the other side, that's what it'll look like.
Oh, interesting.
So here's where I started drawing this back here. It's ran up since. We're coming down today. Will it track down back around 91 or 2 where it was previously? Maybe I'm ahead. Maybe this is that bounce. We'll see. But will it shoot up to that 90? We'll call it 97 3/4. That's where this one was. Then will we shoot back up to 100 around March?
So like a U-turn.
Because that's kind of the symmetry there in the pattern. Will it play out? That's going to be one to watch, I think.
Yeah, that's interesting. That's interesting.
It's like a W within a W.
There's a little bottoming structure there at the end.
It is a bottoming structure. This W pattern is pretty typical for a bottoming pattern, and it looks pretty clear because we didn't make a new low. We actually made a higher low there down at the bottom, and what is that, June? Compared
Yeah, we're making higher lows the whole time here.
making higher lows, yeah.
Yeah, the bottom was January of 21. And June was highest. There's the higher high.
Yeah, and that's not good news for both. I mean, if this scenario does work out, it's not overly positive going into 2022 for cryptocurrencies and commodities.
And when you see stuff like this happen, obviously if we have some other event that happens that throws it all out of the case where, suddenly the Fed rips off tapering, we'll see what that does to the charts with the Dixie, because that could, if something there's more demand for the dollar, that will also drive behind it. If interest rates do jump, you'll see an institutional investing in large holders move their money back in that if they do get interest rates that do pay more. Because that's one thing, if none of the interest rates are high, the funds go somewhere else, whether that's for the huge investment funds, the pension managers, all that's come into play there. So there could be a shock to it at any given time, but if there isn't a shock, I'm going to see if this plays out.
Yeah, that's an interesting chart. I like it.
All right, I get a little bit too many charts and it gets to jumps. Let me close out some of those guys, and then I will go back. Yeah, leave. Go ahead and see. Bye.
Yeah, we're still up. So yeah, good move on the markets today. Whether or not this is just a dead cat bounce off an oversold condition or not, or it's the beginning of a new leg higher, we're pretty close to the. Actually, we've been creeping up now for the past couple of weeks. We had a little bit of a downturn, but we kind of hit a bottom there in the beginning of October. What do we got to, how much further have we got to hit the highs? It's at 45.40, someplace around there.
Let me pull over this other chart. It's a little bit easier to see if I can find her. It might be right behind us, actually. Yeah, here we go. Yeah, 45.45 is the all-time high.
Okay. So we got to get through that 50-day first.
Yep. Yeah, first we got to close above this. The Dow's right at it. What did we say earlier? 870-ish. We're at 850.
Yeah.
It's right on it right now, so keep an eye on that. We
Yeah,
do
that's the one
see
line.
supply demand. It does look like there is institutional buying happening right now. We're at a 13. I think it was 14 when we started when we opened up today. So if that stays up to the double digits, that's a good signal that it'll continue.
Absolutely. Yeah, that's a really important number that we track all the time. It's proprietary to Tradingology.
Yeah, that's not something you'll find in your toss charts. That's the market timer on the NYSE, the supply demand indicator. That's leveraging the internals. So that is a live number. So it doesn't work in overnight trading because the market's not open, but our members that have that tool leverage that one very heavily for sure. Any insights from our guest for the last taking a look at what you've seen recently? I'm curious, Jim. What's your early insight on any feedback? I always welcome feedback.
I guess it all depends on where you are in trading when you first begin, right? So if you're brand new, I felt like, and I'm like probably, I don't know, not really raw. I spent a couple years trading crypto, and once you've traded crypto, this becomes like having all the indicators, and the volatility in crypto is ridiculous. And it's just like, and the mistakes you make, obviously, in crypto are, if you can learn from them, you're much better prepared for regular, trading S&P or whatever, So if you can avoid chasing candles and up or down, falling knives, all that kind of stuff, you can avoid all that and learn from those mistakes, and then hop into a course like that for me, it was fantastic to be able to see it live and to learn the indicators and to replay mistakes I'd made. Like, wow, if I knew this before that, I wouldn't have done that. I wouldn't enter here. Just really a lot of it is getting a bias for the day and staying with the bias for the day, using all the indicators, and getting set up. Don't just hop on the chart and start trading. You got to set up the day, get ready to go, set your bias, and then don't go against your bias. That's the biggest thing per day. And that's one of the biggest things I learned from that. But on the flip side is the option stuff. I watched it twice, and I have to keep watching it again to get a grip on it. But Dave and I went over some more today, and sitting here with him made it much easier to actually understand it, because there's a lot of it just lingo. Like I didn't know exactly what in the money, out of the money, what those things meant, and the spreads and all that kind of stuff like that. But sitting here with him made it easier because I'm asking my questions directly as I go. You know what I mean? So it's like, okay, now I understand. But the whole program was fantastic, and the guys you had were great. The guys that were in the group, their contribution was really good too, because a lot of the questions they were asking, but I was thinking the same thing. So
Awesome.
you had a nice mix of people in there. A lot of guys seemed like they were experienced, and some other guys were maybe had experience trading, but not so much with the indicators, which was nice. It was a good mixture in there.
Well, I appreciate your feedback for sure. And you have a fantastic mentor. I can tell you that firsthand, sitting right next to you there. So.
Oh yeah, I don't take for granted being able to just reach out and ask questions to him anytime. I understand what I'm talking to.
Absolutely. Awesome. Well, enjoy that course. Enjoy all of it too, and we'll look forward to watching your results, because that's some of the best results that I have now is watching other students. So we appreciate you investing your time.
Yeah, no, it's I'm looking forward to getting my 25 or 30 trades in on the paper account, and then I'm sure making more mistakes, which is going to happen.
Right.
And then slowly dip my toe in a little bit.
Perfect. Yeah, nobody's perfect. Dave and I still have losing trades too. It happens. So that's the worst thing that people can do, is think you're going to be 100%. If that ever happens, I don't know, count your blessings. If you get a streak going.
Yeah, I was just looking today at the S&P, like we were talking earlier, the distance between the red cloud and the green cloud, it's just massive right now. It's just crazy.
We get these huge expansion days. You got to be careful.
Yeah.
Don't be on the wrong side of that trade. That's for sure. So that's exactly like you said, have your bias and don't change it. All right. Well, we're close to the top of the hour here. There might be some, we'll just keep saying we got a lot of changes coming. So keep your eyes out for that, guys and girls. Any parting words before the weekend, Maestro Dave?
I don't think so. I think that, if you take a systematic approach to trading, you're going to be successful. I think, I think you have to have the proper mindset, and Jim really has the proper mindset. He's here to learn. He's really soaking everything up, and he did, review the videos over and over again. So when we did get together in person, he was prepared, which is great. And, in the future, I would love to do some live training, maybe at a central location that we could both get to. And that would be so much fun. I think I'd really enjoy that. So the personal interaction that we've had, yesterday and today was really, really good. I think it helps the learning experience. So let's see where the market goes. It's always, it's always a interesting and fun time because, things change on a daily basis. And that's why we have the tools that we have. You don't go skydiving without being prepared, and you don't go into the market without being prepared and having the tools that you need.
Absolutely. Watch that barometer, watch your altimeter, know where you're at.
Absolutely.
Circle of awareness. Know what you're doing. I'll leave you with that one too. So appreciate your guys' time. Jim, great to see you. Watch the gas gauge, Tom says.
Yes.
Always wise advice from Tom. All right, guys, have a great weekend. We'll catch you on the flip side.
Thanks, Dan. Take care, Tom.
See you, everyone.
Bye.